Hello, guys, it's your boy Stephen Shakes, and we are back. We are back for sure, baby. So, guys, in this video, I don't want to waste any time because you already know my channel is an educational video and mainly focus on forex analysis, the way we trade. So, I'm going to be teaching you guys my strategy or just like showing you how I trade three games, analysis, market breakdowns, and all of that. So, guys, I don't want to waste any time because, like, this is the first video that we are dropping. As you can see, I deleted all the other videos that I posted on my YouTube, and I'm gonna start over. So this is not the video where I'm gonna explain as to why I haven't been posting or as to why I haven't been consistent. I know, guys, it has been 2 years, 2 years without recording anything. But like in another video, I'm gonna explain all of that, how life has been, how trading has been, and the improvements that we did. Guys, unfortunately, that video is not this video, but like I want to show you some amazing trades that we're able to take. I took some that I missed, and really good trades. So I'm just gonna show you guys more like a top-down analysis from the monthly time frame, the weekly, all the way to the 1 hour time frame, guys. The thought process, how I could have managed this trade, and all of that. So without wasting any time, let's get into it. Let me just hide this one, and let's go straight to our trading view. So this is a trade right now. It's a setup. I was looking, took Bitcoin somewhere around here yesterday, took me out. Same trade, take that same trade again. I would take that trade over and over again. But like I decided to stay out of this one because I took USD JPY, and like yesterday the market showed me flames, guys. I lost 1.8%. Yeah, 1.8% on my 10K account. But I'm currently in this one. I think it's a break even. But like what I want is for this 4 hour candlestick to close below this 0.5%. 0.5% is more like 50% of this previous candlestick. I wanted to close down there, and then that would be better, honestly. This is a trade that I took on USD JPY. I took another trade on USD JPY yesterday, and it took me out for 0.5%. So, but anyway, guys, I want to show you GBP JPY. We are going to be doing a top-down analysis on GBP JPY. Just boy Stephen Shakes. You already know what it is. You already know what we do. Not GBP JPY, but it's Gbpcad. What's wrong with me? Okay. So, guys, we're going to start from the monthly time frame. From the monthly time frame all the way to the 1 hour to the 5 minute, if it's really relevant. So as you can see, guys, without wasting any time, you can see this is a monthly time frame. Nothing much on the market, just been moving up and down, up and down. So we're just gonna start off by marking our lows, significant lows. As you can see, let's just start off with this one. So you can see there's this low, but like we are gonna erase it as we go down the time frames. So I'm just gonna put this arrow here to indicate that we broke this low. Even though if it's just with a week, it's a week on the monthly time frame, but like on the other time frames, it's at the actual candlesticks down here. So we're just gonna be highlighting this one. As you can see, there was also value somewhere here. You can see how the market broke these lows, and created volume here, dropped, came to tap this volume, and then dropped. So I'm also gonna do this. Not really relevant, but like it's more like I'm teaching you guys more. So let me just show you. Okay, and as you can see right now, market came from all the way down here, built some volume here. This is volume, actually, guys. This is volume here. And sorry. And yeah, so now we are gonna go to the weekly time frame. Nothing much on the monthly time frame. This is more like to get a picture of how the market is moving and all of that, guys. So on the monthly time frame, on the weekly time frame, I just want to show you guys this interesting area. This area, you can see price was building, price built some volume down there, and then you can see the momentum from here came all the way down, corrected, impulse, corrected, and then impulse. So this is our area of interest. It's a value area. There's volume down here. You can see this volume was built, so prices came to tap in this volume, because price moves from volume to volume, or from value area to value area. So We hope it drops all the way down here. It's not gonna drop immediately straight up, but it's gonna drop impulse correction, and all of that. So let's go to the daily time frame. We already marked our area, so we were looking for sales here. When the market came here, I remember it was around, yeah, March and April there. I was looking at it. I was like, I knew that it was not gonna drop right away, but I never thought it was gonna take this long for us to actually just get some good trades. But as you can see, we also got some sales here, but then it just went up. So what we are gonna do next, we are gonna connect our highs and lows. As you can see, let's just connect these highs and lows. Let's just connect these highs and lows. See? So this is a pattern that we trade within the Falcon system. It, it's a rising wedge. Basically, it's a reversal pattern considering that we are at this value area and we are already looking for sales. So for us to get this rising wedge is more like, oh, it's more like a double confirmation, guys, that the market is really gonna drop. And yeah, and it dropped. But like that's not the trade. You just don't enter right away here. So let's go to the 4 hour time frame and see how things have been moving. So on the 4 hour time frame, guys, you see there's also this thing called patterns within patterns. So a trade it becomes a high probability trade when you have patterns within patterns. So if we are to connect our recent highs and lows here, you will see that we'll connect this to here. Connect this to here. That's also a pattern, and it's a reversal pattern. It's a reversal pattern. So pattern within pattern confirmation, guys. So yeah, we analyze on the monthly time frame, weekly, daily, 4 hour time frame, and the monthly time frame. That's where we analyze. And for our entries, we take our entries on the 1 hour, 15-minute time frame, and the 5 minute time frames. But the 5 minute time frame is more like for advanced traders. So you just don't get, if you're a beginner, you just don't jump to the 5 minute time frame and then start looking for entries. So you don't analyze on the 5 minute time frame on smaller time frames. You don't analyze on entry time frames. There are time frames that are just for entering trades and time frames that are for analyzing. You feel me? And there's no way you can take a trade based off the monthly time frame on the monthly time frame, and you are gonna end up having a large stop loss. Okay, so guys, let's go to the 1 hour time frame just to show you the trades that we took. Unfortunately, I didn't pay for my trading view. I'm not yet there. But once I pay, I would be reversing and going back in time for it to be more like it's live. So as you can see, guys, the market came here. The market came here, tapped, gave us the third touch. This was the second touch. The first touch was somewhere down here. Here was the first touch. The first touch was somewhere here. And as you can see, this is the second touch here. The other third touch, first touch is also somewhere here, but I'm not gonna zoom in. So yeah. So let me show you guys. So as we approach our third touch, we needed something, an impulse, a correction for us to take a trade. So the market moves like this: impulse, correction, impulse, correction, and sometimes it can be a big correction, impulse. So we must wait for the impulse and then correction. So you can see it impulsed here, but didn't really give us the correction that we needed. It just corrected all the way up to create something that looks like a double top, and then it dropped. And then we finally got our first correction, which was here. So I'm gonna delete this. I'm gonna delete this, and I'm gonna go on the 15-minute time frame where we actually took trades. And just for context, guys, that was a trade that I took it on my 10K account. I'm just gonna show you as to how I took this trade and why I just closed, guys, and I made crazy big on these trades because like I was able to scale in on one trade here. Scaling in is more like entering another trade while also in another trade which is running in profits, guys. So my network is a little bad. I'm sorry for that. My apologies, guys. Once we get there, once we get funded with 100K, we're gonna buy that Wi-Fi and it's gonna be very fast, and I'll be delivering the best content you will ever find on the internet. So yeah, guys, let me just show you what happened here. What happened here, as you can see, let me also delete this one. What happened here is this. So market impulse down here and then it broke this low. What I was seeing, that I was waiting for a pattern. I was waiting for something that looks like a smaller continuation pattern, something like that, for me to actually take a trade. That is what I was waiting for. For me to actually take a trade. But guys, sometimes if you are waiting for perfect things, or if you are waiting for a lot of things, it doesn't happen. So you gotta be able to adapt, and you gotta be able to be ready for whatever conditions the market gives you. So once this happened, I started to see this correction, and then I placed an arrow right here. And this was more like my value area. I was waiting for the market to come in and take a trade. But then when it came here, I don't know what was wrong with me. Like, it was like at the opening, when the New York session was about to open, but like I was not available. I wasn't able to take this trade from here. But like guys, but like guys, I it went without me, and I was still patient. I was like, okay, if it went without me, I'm still gonna get another one. Then dropped, later on ended up coming here. And I can remember very well. I had something on like this. I had something on like this. I had something like this. Yeah, so this was my continuation pattern. You can see impulse, correction, impulse. And then I was actually able to take this trade. I took this trade, I'm not gonna lie. So as to how we took this trade, I waited for this. When I saw this candlestick, I was like, this cannot be a reversal candlestick. The wick is too long. I'm gonna wait for something like a bearish engulfing candlestick, a red candlestick, so I can actually sell. And I remember I took this trade somewhere around here, just a few hours after waking up. I was done with my morning routine, and I remember I had the 20 pip stop loss. And the 20 pip stop loss, that's why I took my trade. So guys, I entered on the 15-minute time frame, but like I managed trades on the 1 hour time frame. I was managing this trade on the 1 hour time frame. Let's quickly just go to the 1 hour time frame and see how we were managing this trade. So then shot all the way down here. So you can see I was floating. I wasn't floating in 8% because like I was still at break even. I was risking 0.5%. So I was floating in 4%. Here it was around 10. Yeah, it was 10 on Wednesday, but I entered this trade. Okay. 24 hours into this trade, I was like running at 4%. Damn, that's crazy. And as to how I was managing my trade, I was actually I had my stop loss 50% of the move. My stop loss was here. My stop loss was here. And yeah, this whole time when the market came back, it was reversing. Damn, I was so afraid, man. I was like, damn, this it's retracing back to my entry. But I was very patient. I was calm, and I just left it there. Even when all this was happening, I was just like, maybe it's just forming a pattern for it to drop. And I actually thought it was forming something like this. Also took this because now you can see impulse correction. So I thought it was gonna form another correction for it to drop. It's a correction, but like I couldn't get any entry here. As you can see, guys, this candlestick, the green one, is too long. I couldn't get an engulfing candlestick. Even if I was to get an engulfing candlestick, I was gonna end up with a larger stop loss. So I was just like, I'm gonna wait for my insurance entry. And insurance entry is that type of entry where the market, like these two touch, it drops, it comes here, and then wait for something like a small pattern. Not something like a small pattern, it's just a pattern. So this is what I was waiting for. If I could have got this, I could have entered like this. I could have entered like this. I could have entered like this. Yeah, but like I was waiting, guys. What I was waiting for didn't happen, and it's part of the game. So I was just like, yeah, no problem. Yeah, we later on had to evolve. We had to connect our recent highs and lows. This is a high, this is a high, this is a high, and these are the lows. So I ended up connecting from here all the way down here, all the way down here, and also all the way down here. So with this pattern, sometimes guys, you remember that I was saying it's a reversal candlestick. It's a reversal pattern, but in this case, it was acting more like a continuation pattern. It can be both, depending on where it is. As for now, you can see it's just in the middle of somewhere. We had this low. I was thinking of this low. We had this low here, but like if this pattern was somewhere here, let me just show you. Let me just show you with this. No, sorry. If this pattern was here, if this pattern was somewhere here on this low, it could have been acting more like a reversal a reversal pattern, but like it was just in the middle of something. You can see it's a correction. 80% of it is a correction. So I knew that it was gonna be a continuation pattern. And I was looking for an entry. I was looking for an entry. So as I was analyzing this, I remember dropping all the way to the 15-minute time frame. I remember dropping all the way to the 15-minute time frame. And I remember seeing this. I remember connecting this. Just for the sake of connecting it. I remember connecting this. This was more like a pattern within a pattern. You can see it's a rising wedge. A rising wedge is also a continuation pattern. So continuation, continuing way down. You can see the market came from up. So guys, I'm not gonna mark this with a marker. I'm just gonna use my this dotted thingy, my crosser, or whatever it's called. So impulse, correction, impulse, and we also had the middle section here. Don't worry guys, it's my first video here. I'm gonna be teaching you everything what middle section is, patterns within patterns, how we enter, and all of that. So when the market came here, I dropped I dropped to the 1 hour time frame, and this was at 9. It was in the morning. It was in the morning. I got this candlestick. I got this candlestick, which is like what? A drag. I remember the names of the candlestick, guys. But like I remember studying this candlestick in that famous PDF. The Candlestick Bible is the one that taught me about candlesticks. Don't know if it's a dragonfly, a doji, not a doji, a gravestone, something, but I know it's a reversal candlestick. But like in my head, I was like, hell no, I'm not gonna take an entry like this. Not gonna take an entry like this for 20 pip. I was not so I was just like, let me just wait for an insurance entry. And what was an insurance entry? I just explained it, guys. So you must know an insurance entry, you wait, let me say this is your value area, you wait for the market comes here, you don't enter right away, you wait for it to drop, gives you a pattern, and then you go. This is your insurance entry. So so let me just delete all of this. So to look for the insurance entry, I had to drop all the way to the 15-minute time frame. I dropped to the 15-minute time frame to look for my insurance entry, and it dropped. When it was dropping all the way, I was like, we are not gonna get an insurance entry. But I was like, no, we are gonna get something. So market dropped below these lows. This was more like a support, but it got broken, so now it's acting like a resistance. So I could see this. I dropped all the way to the 5-minute time frame to filter it more and have a look at what's this. So I had to drop to the 5-minute time frame. When I went to the 5-minute time frame, I was able to connect this. I was able to connect this. I was able to connect something like this. I know it's very steep, but like it's a clear pattern. It's retesting these lows. So I remember taking this entry on the 5-minute time frame. I took a reduced risk entry. I used pending orders. I used sell stop, and yeah, 20 pip stop loss. I remember very well. And then I went to the 1 hour minute time frame, 1 hour time frame to manage it. So when I went to the 1 hour time frame, mind you, this one was still running. This one was still running. When market was here, I was already 9%, 3.5%, as in 3.5%. So I had it somewhere here. Let me just show you how I was managing this. When market came here, when market dropped here, I moved this one here. I moved this one here, just above this, just above these lows, just in case, just in case the market come. Sorry, I I had it above this high because like I couldn't put it somewhere here because I know that what if the market comes and retrace this high, so I was gonna be out. So I had to put it just a few pips above this high. But let's delete this one. And yeah, when I was seeing this, I think I moved it. I think I moved it somewhere here. I think I moved it. Yeah, I moved it in. Yeah, let's just say 7%. But obviously, I wasn't risking 1%. So and then this one didn't hesitate, shot all the way down, guys. And oh, I'm so happy with this trade. Shot all the way down. Yeah, I just got out of this entry for 3.5, 3 for 3%, and I got out of this one for roughly 10%. So guys, I made 13% on my 10K account. I made 13%. Isn't that crazy? I made 1.3. 1.3. So that's how we took this trade. And as to why I got out of this trade, it's mainly just because, like, guys, it's mainly just because, um we had this trend line here. I just got out. I had no reason to get out, but I honestly just got out. I'm so sorry. I just got out of this trade, but like I remember I also had something like this. I remember I also had something like this. Okay, had something like this. So we reached 90% of this channel. I'm gonna explain that in later video, guys. Later videos. This one is just in not an introduction video, but just like something I just felt like I needed to record this trade and show you guys. So I got out, but if I was still in this trade, if I was still in this trade, I could have been floating in 6% plus. Yo, could have been floating in 18%, 17%. That's crazy. That's like 1.7 pounds. Pounds, because like my account is in pounds, guys. Just imagine making 1.8 pounds in two single trades. Like within just like I entered on the 21st. Today is the 29th. Just imagine, guys. Just imagine how much that is. So guys, that's what we do. It's your boy Stephen Shakes. I'm not gonna show you anymore. Nothing to show you, but like maybe let's just quickly go through the trades that I'm in right now. I'm in USD JPY, and I already told you as to what I'm waiting for. As to what I'm waiting for. Okay, so as to what I'm waiting for. I want the 4 hour candlestick to close. I want the 4 hour candlestick to close. Or like to fill 50% of the previous body. And then yeah, you're still in profits. I'm not gonna do this, but I also had Bitcoin on watch. I took a Bitcoin trade yesterday and it took me out. But like it's a very nice trade. It's a very nice setup. How Bitcoin is set up. Oh, you can see guys, we have it on the 4 hour time frame. This is our value area, the arrow, and then we have our reversal candle, our reversal pattern, which is a running channel 1, 2, 3. And so we are just waiting for a pattern, impulse correction. Then we take the pattern. Most of the times, let me quickly give you a lesson. Impulse, correction most of the times are patterns, but not always. Sometimes it can just be something that looks like this. I mean, you can connect something and make it a pattern. Most of the times, when we get something like this, these are the ones that we take. They are patterns, reversal patterns that we take, reversal patterns that we trade. We trade them two ways: with a risk, reduced risk entry, or a risk entry. You can take it like this, or you can take it like this with pending order sell stops. But like when I say high risk or high risk entry or a reduced risk entry, we just risk the same. Our risk is fixed. If I'm risking 1%, I'm just risking 1%. If I'm risking 0.5%, I'm just risking 0.55%. Sometimes it all depends as to how I'm performing, if I'm in drawdown or like whatsoever. But like as I said, I just made 17%, so we're gonna start risking with 1%, and we don't go beyond 1%. We never risk more than 1% of our account. Never. You see, guys? So it's a lot for me to take this entry. Very simple, but like my psychology had to be very, very regulated. It took years to develop this type of mindset that I have, guys. And lucky for you guys, I'm gonna be sharing it with you. We are here to empower each other in whatever way you can. As to my fellow traders that have made it at the end of the video, guys, do me a favor, guys. Hit that subscribe button if you like the content, and yeah, just like it. If you're not gonna subscribe it, at least if you trade the same, if you like the way we trade, subscribe so you stay in the loop for more videos like this. This is just the first one, unplanned, but more planned videos will be coming, and you guys are gonna enjoy the free content. And if you don't trade the way we trade, you can still subscribe, because I'll be talking more about psychology and how to manage trades. Not really in the technicals, but more like on the psychological side. So from your boy Stephen Shakes, yeah, man. Have a blessed day, guys. Have a blessed day, honestly. Thank you.